What's up, mortgage coach community? I think this is not my second interview with Josh Mettle, but it's the second time on a Saturday. Or is it the first time we've done this on a Saturday?
Well, since I just got out of an ice bath, I'm actually sitting here freezing my ass off and shivering, and I'm hoping I can pull it together, Dave, but we're going to make it work.
Well, we're gonna warm it up. So one time on a Saturday, I distinctly remember because it's one of my all-time favorite interviews. It was on the day that my son was going to compete for the state championship in lacrosse.
Right.
I had a lacrosse shirt on. You were at home, and it was called Gratitude for Greatness. I'm going to put a link to that down below because it really was a special interview. It was one of the top 10 videos that year, and it was all about how Josh and his team practice gratitude. They do a little 15-minute gratitude huddle before they lock down and prospect and win by noon, from 9 to 11. So link down below. So today we're doing something a little unique as well. So Josh is going to be presenting on Wednesday or Thursday, Josh?
Thursday
In Las Vegas at Stephen Marshall's mastermind event.
Right.
He's got a keynote that he's been working on that, I've talked to him about. I think it's going to be very special. And so we're kind of doing a practice run of that. And for those of you watching it, like if you were fortunate enough to be at the event and see it live, guys, there might be some new nuggets here. It might be a little more conversational, so you're getting some incremental value. And I think this will be watched thousands of times. For thousands of you that weren't at that event, you're getting a gift of this presentation. Josh, anything you want to say before we bring you on stage and rock out a dry run?
Well, I appreciate you being the consummate coach that you are, always helping me, always feeding me nuggets. And it's funny, as I'm looking at my slide deck over here on the left, like this has really been the evolution of the last 10 years. I've been going down this path, and it's all kind of come together with what we're going to talk about and what I'm going to share here. And the subject, the speech, if you will, is titled "The Mortgage Professional of the Future." And if you're good, Dave, I'm going to just kind of jump in and frame that up.
The only thing I want to do is I want to bring you on stage. Like I want to do an intro, like I was the MC of this event.
All right.
And then I'm going to hand it off to you and, jump on stage and take it away. Sound good?
Let's roll.
All right. So I'm just ad-libbing here, guys, but I can still remember when I met Josh Mettle. It was over a decade ago. Bill Hart introduced me to him, and he was a well-known top producing loan officer that I really wanted to get on Mortgage Coach because I heard he was a values first leader. He did a lot of production. He was just one of those people that other people looked up to. He, invested in real estate. He took care of his health. He epitomized what was the modern mortgage originator over a decade ago. And if I remember correctly, Josh really decided I got to start using Mortgage Coach because you were getting ready to take, was it a 1 month or 2 month vacation or sabbatical?
3 months in Thailand. It was rad.
Yeah. So he was going to go to Thailand for 3 months. And his Mortgage Coach why at that time was, you know what? I've got this conversation. I have these deliverables and I crush it, but it's me. It's not scalable. And the way I see Mortgage Coach is this is something that's scalable. Like I could hand this off to a team member and they can still deliver a wow experience. And I could go to Thailand for 3 months and my team will crush it. So Bill introduced me to him. Josh said, Savage, game on. And I said, hey, I will personally mentor you. I only have one ask, and that is that you do 20 TCAs. Like for a month, you do this 20 times. And then if it's not working and you don't love it, give up. Does that ring a bell, Josh?
Spot on, man. It's spot on.
So a week later, he calls me up and he's like, hey, bro, I just want to set expectations that, this isn't going to work for me and my team. And I'm like, what? He's like, oh, it's taking too long. It just, I'm just letting you know that, I'll still do the 20, kind of like maybe, like you were ready to quit. You were calling to resign.
It was the white flag. I was waving the white flag. Yes.
Yeah, but you framed it as I'm setting expectations. And I'm like, well, Josh, how many TCAs have you created? You're like, I don't know, 4 or 5. And it's like taking me 15 minutes. And, I can't take 15 minutes for every lead. And I'm like, all right, bro, well, remember it's 20. And you go, okay, I'm integrity. I'm going to do the 20. And I swear, I think it was like 3 days later, you texted me, oh my God, game on. I think it was number 7. You won a loan. First of all, you got better at it. I think you talked to Jeremy Forcier.
He helped me a ton.
5 minutes out of your process, and you won a loan, and you got referred to as, like, you had a double wow. You wowed a consumer, you wowed an advisor, and you're like, and I think it was number 12 TCA.
Yeah, I think it was 12.
And here we are, a decade later, thousands
12,000 TCAs later, here we are.
and I'd say more importantly, you've impacted hundreds, probably thousands of loan officers, because I've interviewed you and they've now become mortgage coaches. You've helped thousands of families. You've impacted thousands of realtors because you're an advisor. So guys, I want to give a hand to Josh Mettle. He's going to do a presentation called The Mortgage Professional of the Future today. Like, guys, everyone who watches this, you could be the mortgage professional of the future, and you could do it today. Josh Mettle, let's go.
Thanks, brother. Well, it occurred to me that we're in 2022 as we're filming this September. I don't know when everybody's going to watch this, but we're in the middle of another incredible shift in the mortgage industry. And in 2009, I was headed to Las Vegas in September, right around the same time of year. And I was headed to a very similar event that I'm headed to this week. And there's kind of an eerie parallel between my very first Las Vegas Mortgage Summit and the one I'm about to go to this week. In 2009, as I got to Las Vegas, my entire world was imploding around me. The Great Recession had finally hit Utah. I thought the Mormons were going to save us, but no, it just delayed the mortgage meltdown getting to Utah. And when the mortgage meltdown hit, my business and really my life absolutely just completely crumbled. So I found myself as I was headed to Vegas, alone, afraid, scared, and really in a place where I was having an emotional breakdown, an emotional catastrophe, if you will. Now, what was interesting was the first 8 years of my mortgage life was a total absolute rocket ride. The first year in my business, I earned over $100,000 in gross income. And by the time I was 29, I had my first $1 million year in the mortgage industry. And for a kid who grew up on food stamps and, hopped around from motel to motel as a kid, paying rent 1 week at a time because we didn't have enough money for first and last month's rent and a security deposit at a normal apartment, like $1 million might as well have been $1 trillion. Like, I couldn't spend that much money. I felt like Scrooge McDuck doing, backstrokes and flips and twirls in my money bank. And it was just an unreal, kind of surreal experience for me as a young man. Fast forward, by the time I'm 31, my wife and I have acquired 53 rental properties. We have the home of our dreams, the cars of our dreams. Like, everything is better than I could have ever have dreamed it or tried to really imagine what I wanted to even manifest. Well, that was true right up until 2009. And when the music stopped, when the mortgage industry changed, my entire business collapsed in a time frame that was so short, it was hard for me to grasp. In January of 2009, I had over 160 loans in the pipeline. It was myself, one loan officer assistant, and one processor. And by September, when I was headed to this first mortgage event, I was doing a pipeline review actually the morning that I'll never forget this. I was doing a pipeline review the morning that event started. And as I reviewed my pipeline with my loan processor and loan officer assistant, they informed me that we had 4 loans cancel. I don't know if you remember these days, the loan programs disappeared overnight, and that made it so 2 of the loans dropped out. 2 clients just walked away from earnest money on new construction homes because of what was happening with values. And those 4 loans fell out. And as I closed my laptop and ended my pipeline review, I realized I had 2 loans left. So imagine going from everything has just been going as good as life could imagine up until that point, having 160 loans in the pipeline, all of those rental properties. Like everything was just perfect, to having 2 loans left in my pipeline. And I immediately went back in my mind to that scarcity, that fear of not having enough and being able to survive and not having a home and not having enough food in the fridge. I immediately went back to that like scared 10-year-old kid, like little Josh. And as I walked downstairs and walked into that mortgage conference for the very first day, I literally had a panic attack, an emotional breakdown. Like, I don't know what you would call it, but I remember walking through those doors of that mortgage event and seeing the lights, the music, the happy, smiling people. I was like, what the hell are all these people so happy about? What's going on here? And as I sat down, I literally just began to spiral. I got hit by every emotion you can imagine. Fear hit me. I was afraid that, I was going to lose my business, my investments, my wife. I'd only been married a few short years, and I didn't know if she would stick with me or not when things got tough. Then I started to feel like massive, massive guilt. Like, how could I be so stupid that I could get myself to this place, have no liquidity? I've got all of these renovations that I'm doing on all my rental properties. I'm hemorrhaging cash there. I have no safety net. And now I've got 2 loans in the market, or 2 loans left in the pipeline. And then I was just overwhelmed with this kind of feeling of shame. Like I was rehearsing in my mind, I'm going to have to tell my team, my colleagues, my friends, I wasn't a great businessman. I wasn't a smart investor. I was just freaking lucky. And when the music stopped, I was a failure. And I was just really crushing myself sitting there in that event. And at that moment, the pain of that guilt and that shame, and really started to feel hopeless, was so brutally strong for me that I began to look for ways out. And I started to think about just bailing on this mortgage event and going and just getting wasted. Thinking about alcohol, drugs. I even started to think about maybe I couldn't make it through this, and what are the ways of getting out of this life? It was a bad, bad, deep hole that I was in. One of the darkest moments of my life. And as I sat there kind of contemplating how I was going to get myself out of this really painful place, something that I really can't even put into words. It's hard for me to describe it even to this day. But as I was sitting there trying to figure out how to get myself out of this really painful spot that I put myself in, Bill Hart was on the stage. And Bill Hart was interviewing this young man. And this young man was telling the story. By the way, I totally lost track of time. Didn't even know the presentation had started. This young man was telling the story about how he had crashed and burned, how he had completely exploded his business, lost all of his house, blew up all of his relationships, and within 2 years had completely remade his business. And he was going to have his best month ever that very month. And it was right there in that moment that I literally heard these words. And I've gone back and forth on this, trying to figure out, did I hear those words? Did I think those words? But I believe I heard these words, and I can't explain where they came from. But I heard, why not me? And I was looking at the stage, I was hearing this young man's story. I borrowed confidence from him that he was able to crash and burn his business, his life, everything that he had, and rise from the ashes like the phoenix and rebuild his business in 2 years. And I thought to myself, why not me? And so in that moment, I realized that what I had built over the previous 8 years in the mortgage industry was literally the mortgage professional of the past. I'd had overspent like a drunken sailor. I had no liquidity. I only thought that I was so good that things would just get better every year. And I had one business pillar. And when the market shifted, all of that came down like a house of cards. And it was in that moment that I made a decision that I needed help. I needed a coach. I needed someone to help me become the mortgage professional of the future. And that for damn sure what I had done up to that point was not going to get me to where I wanted to go. So believe it or not, I called my wife and I said, Hillary, how much money do we have in the bank? And she's like, not enough. I'm like, no, I'm serious. Like, how much money do we have in the bank? By the way, that's not a call you want to get from your husband when he's alone in Vegas. That's not really a great way to start a conversation. And she said something like, I think we have $13,000. Now, team, that's not going to get me through a week in my lifestyle at that moment. So I'm in very, very, very deep trouble at this moment. And I said, do you trust me? And she said, yeah, kinda. And I said, I need $7,500 of that money. And she goes, you're okay. All right, go for it. And on the spot, I tracked down Bill Hart. I hired him. I wrote him a $7,500 check, and we began coaching, and he helped me reshape my mortgage career into what I would now describe as the mortgage professional of the future. And of course, that's something that we're always striving for, right? I don't think you've ever arrived, but today and on this call, what I hope to share with you is that journey and what I believe the vision of the mortgage professional of the future is. Now, I wanted to share that whole story and give you context around my path, because it occurred to me as we go into this event, there's a lot of darkness in the mortgage industry. There's a lot of people who are scared. There's a lot of people who are feeling guilt. There's a lot of people who are feeling shame. And I believe there's more than one person going to watch this or in the audience where I'll be giving this presentation live that is feeling a little bit hopeless in this environment. And what I would share with you is that these seasons come and these seasons go. And what's great about being a human is that we're not trees. Like, we don't have roots that go down 80 feet that stick us in this spot. If we don't like the results we're getting, we can stand up. If our cheese moves, we can move to where the cheese is. There's always opportunity, always. And as long as we are focused on the opportunities that are created by the challenges, we will be able to innovate. We'll be able to change our business. And so that's exactly what I've done over the last 13 years since that 2009 event. And that's what I'm going to share with you today. I'm going to share with you some ideas, but if you don't decide to take action and execute, if you just go back to doing things the way you've always done, then you might as well be a tree. You might as well have roots 100 feet down and we can just wither and die. If you want to be able to figure out how to make a living and how to not just survive, but thrive in a 7% interest rate market, I know we're not there yet, but buckle up. We may get there very soon. If you want to be able to thrive in a 7% market, you've got to be able to pivot. You've got to be able to move to where the opportunity is. You have to execute, and do things differently. So with that, I'm going to share my screen and we will jump right in. All right, team. So the first question that I have been thinking about a lot is the greatest expense in our business. You know, I hear people talk all the time about we have to reduce the manufacturing costs of mortgage. And I agree. That is important. But here's what I would offer. The greatest expense in all of our businesses actually isn't the manufacturing. It's not the human capital. It's not any of that stuff. I believe the greatest expense in any of our mortgage businesses is missed opportunities. It's missed opportunities. And here's why. On average, the statistics say that only 18% of clients come back to their original mortgage professional to do their refinance. 18%. That means we're losing 82% of the business opportunities. And if you think about an average commission, because I'm just going to try to put a dollar figure on this. If we think about the average commission being $4,000, And let's just say we did 100 loans in 2022. And in 2023, those 7% rates go down to 4.4%, like Fannie Mae says. Well, if we miss 82 of those opportunities times $4,000, that's $328,000. For someone who does 100 loans a month, I bet you that's their biggest expense, but that doesn't tell the full story, because the average number of transactions in a consumer, in a homeowner's life, mortgage-related transactions, I should say, is 11. So if I missed the second opportunity in 2023, which cost me, let's say I lost 82% of my business, that's $328,000 loss. But then I lose the next, if I lose that one, I lose 10. So the $328,000 figure, which is my 2023 loss, you got to times that by the next 10 transactions. Because if you don't get transaction 2, you're not going to get transaction 11. So that's actually a $3.28 million expense. And if any of you have done 2, 3, 4, 5, 6, 7, I have a client I've done 37 mortgages for, Jeff and Lynn Marchand, amazing friends. They ended up going to my wedding, still great friends to this day. But if anybody's done multiple mortgage for somebody, you know that person is going to refer you to people. That family that I just talked about, Jeff and Lynn Marchand, have not only become incredible friends, which is more valuable than dollars to me, but they have referred me more people than I can possibly count. So missed opportunities is way more expensive than your leases. It's way more expensive than your human capital. It is the single biggest expense in our business. And this quote haunts me. In our businesses, we either act or we get acted upon. Every single day, my past clients are getting acted upon. Billboards, radio ads, pop up for bettermortgage.com. I saw it this morning when I was looking at an article on Bloomberg. Every single day, our past clients are getting marketed to, and we're getting beat. We're getting out hustled. We are being acted upon every single day because our competitors are marketing to our past clients better than we are. Dave, I saw you come back on the stage.
Yeah. Hey, I came on stage, Josh, because one is a dry run, and I wanted to insert something because I think it's so important. Here's the deal, guys. Josh just told a story about how lost loans are the single biggest cost. Guys, it's data, it's math. Now that I am the Chief Innovation Officer of Sales Boomerang, we know how many loans companies are losing. I mean, part of our sales process is to say, hey, give us your database. We'll run it against the data. We'll show you who you lost loans to, what day you lost loans, and
that's painful.
So guys, we have the data. Like even many of America's best loan officers, you are losing way too many loans. And there is no doubt, I'm going to stop talking, hand it back to you. But guys, the data doesn't lie. And so I would push every originator, every manager watching this, measure how many loans you're losing every month. Like remember, you can't, what's the quote? What you measure improves, and you can't manage, you can't measure. Guys, measuring lost loans and making sure that you don't lose loans is huge priority. So I'm gonna hand it back to you. I just wanted to insert data and how important it is to do the numbers.
I was just going to say, when you start measuring how many loans you're losing to competitors, keep your Kleenex box near you, because it's not inspiring. It's a sad fact. In fact, funny you say that, Dave. I have a slide for that. So this is mortgage retention rates as compared to other industries. And honestly, when I first saw this, I didn't believe it. It didn't make any sense to me. And this actually put me on a path towards trying to figure out, is this true? And if so, why? And so that journey led me to find this man. This is Vivek Kumar. And you can go on YouTube and find him. He also has several white papers online. He's the VP of product development at Property Guru Group, which is the largest real estate sales and leasing company in all of Singapore. Their market share is like ridiculous, like 70% of market share. And Vivek has a long history in technology products. Like he worked for Intuit, which is, the TurboTax company. He has a long history of growing infrequent products, infrequent products. And through all of his jobs and his experience, he created a framework to unleash growth in infrequent products. And so Vivek taught me this. Vivek taught me that all products and services have a frequency. Some products, we have an interaction frequency or use frequency daily. Apple, Facebook, Outlook, these are all things that I use daily. Other products, maybe we use weekly. I order something on Amazon once a week. Others monthly. I take my kids to the movies once a month. Go on vacation quarterly. I do my taxes every year. And then you have mortgage and real estate out here in the decades. And the only thing that's used less frequently than mortgage and real estate, of course, is the morticians. They're yet to get their first repeat client. So we don't want to, go any farther out on the transaction frequency spectrum because it's morbid. But the point here is this, and here's my takeaway. As I started to understand Vivek's frameworks of growing infrequent products, I said to myself, holy crap, that's why our retention rates are 18%. Because you and I are forgettable. There is no experience that I can create for a client over 30 days that is going to help them or that is going to make them remember me in 5 years, 7 years, 10 years. What's my proof? My proof is that we have an 18% retention rate in the industry. And so the question that I started to ask myself was, well, how in the world how do I increase the frequency? If I can't increase the frequency of transaction, how could I increase the frequency of interaction? And that led me down this path of trying to figure out, we're going to skip that slide since there's no live audience there. But that led me down the path of asking some really deep questions. And what I would say is the answer to this question, what am I doing today so that my clients remember me in 5 years? I would write that one down because I believe the answer to that question is what the mortgage professional of the future knows. They know how to figure out how to get their clients to remember them in 5 years. They know how to increase the frequency of interaction between the distance of transaction. So I mentioned this stat before, 11. That's the average number of mortgage-related transactions in a borrower's life. And as I said before, if you don't get transaction number 2, you haven't earned the right to get transaction number 3, 4, 5, 6, 7, 8, 9, 10, 11, and you don't get all the referrals. And anybody who has done multiple transactions for a client knows this. As you do each transaction, you deepen the relationship. Transaction 1's all about rate. Can I trust you? Are you going to get my little girl in the home? Because I promised her bunk beds, right? They're trying to figure that out. Transaction 3 is, hey, how'd your son do at the football game this weekend? I saw him on Instagram, right? It's a totally different conversation. And by time you get deep into this transaction interaction with a client and you build that relationship, you're getting referrals. You have opportunities to give referrals. You're talking to people about, do you need a new CPA? Have you updated your life insurance, right? You're having these deeper consultative advisor conversations the deeper this relation goes. By the way, Warren Buffett has a word for this. Warren Buffett calls this economic goodwill. He likes to buy companies that have outsized economic goodwill. That means that they've created so much value in the lives of their customers that their customers continue to come back to them regardless of marketing. So Warren Buffett likes to buy those types of companies because when he goes into a tough year, when inflation runs through the roof, he can actually ramp down the marketing and the economic goodwill that the company has created brings customers back to him. So I want to take a play out of Warren Buffett's playbook, and I want to create economic goodwill so that customers keep coming back to me. Now, I'm going to go through this quick, but I want you to start thinking about your database as a data bank. This is my favorite new term, data bank, because the most valuable asset any of us own is our data, our clients' information, the ability to have notes, conversation logs, and information around those customers. So we're going to do some quick data bank math. I'm going to run through this super fast. I want you to take the total amount of past customers that you have in your data bank, and then calculate that 10% of those are going to either buy a new home every year, and 10% are going to refinance. Because every 10 years, we figure somebody's going to move and somebody's going to refinance at least once while they're in the home. So on average, 20% are going to transact in any one year. And everybody watching this in 2022 is like, I'm not having 10% of my people refinance or move. Well, I know this is an outlier year, but if rates go to 4.4%, I bet you're going to have more than 10% of your data bank refinance next year. So on average, 20%. So if you have a 100-person data bank times 20%, that means 20 transactions a year, times 4,000 average commission, that's an $80,000 of annuity income. I want you to start thinking about your data bank as your annuity income stream for life. If you have a 1,000-person data bank, 20% of that's 200 transactions. 200 transactions times $4,000 in commission is $800,000 of potential annuity income for the rest of your life. I can build a business around that. That's something I can wrap my head around. So what I'm going to ask you to do is to run these numbers. Figure out what is an annualized annuity value of your data bank, and realize that that's the goal. That's what we are going after. And I think most people will be surprised about their data bank math. Most people hadn't realized, holy crap, I've got a 2,500-person data bank, and that's a big number. Maybe I should start putting some more energy into that. And here's what I would offer. Transactional business models equals hamster wheel for life. We're always looking for the next new client. Relationships equals annuity income stream for life. That's what I want. I want relationships with customers. I want to have annuity income for life, not only for me, but for my team. And I want to create outsized brand loyalty and loyalty to my brand and between my brand and my customer.
Real quick.
So the question.
Real quick speaker note. So one, I'm going to get you the slide where you show all the transactions.
Yeah.
And we have one that has gold stars for all the real estate transactions. And I'm going to suggest that you do that. So you're calling out one, all the loans, and two, all the realtor transactions, and start applying that data bank. And you're starting to do it, but guys, the data bank is not only a consistent stream of predictable and consistent loans for you, regardless of interest rates. Obviously, the more rates go down, the more loans for you through refinances, but it's also for your agents. Like if you make your database, you do everything that Josh is saying, and you make your database your single top priority, economically, it's a windfall for you from a predictability and consistent standpoint. And two, it's a massive competitive advantage because you can turn realtors. And I know you're going to get there, Josh. I just think having, calling out, within the loans, calling out the transactions and start driving the realtor value. First of all, suggestion for your presentation, and for anyone listening to this dress rehearsal, it's a nugget. So anyways, I'm gonna give it back to you because I know you only got 20 minutes left and you got a lot of content, but wanted to insert that, brother.
No, I appreciate it. Thanks for the feedback, and I would love that slide. So the question that I have for my team, remember I'm still running a production team, is why are we not calling into our data bank every day? And I think if most of you are being honest and vulnerable, the answer is because we're scared. We don't know what's going on. We don't know what our clients are thinking. And we have fear about not having anything of value to give. And we don't want to be seen as a beggar. We don't want to walk over and, put our hand out and say, oh, can I get a loan, please? How's the weather? Right. So we need something to give us value to have those conversations. So I'm going to share my two favorite tech tools. And
real quick, Josh, I want to also push you. I do think one reason is people have fear. I think another reason is that you don't make it a big enough priority. And you say, oh, I don't have time to do that because you're making other priorities. And I think also it's because they don't know how, like they don't know, or they've done it with the wrong script. Like, oh, I did it and it didn't work, or delayed gratification. Like there are activities that you could do. So I do think when you're on stage, I wouldn't just hang on fear, because I personally think just all the loan officers I've dealt with, it's busyness. Oh, I'm too busy.
Yeah, prioritization, time blocking for sure.
Yeah. So guys, Josh, I don't know if he's going to share scripts, but we have scripts. There's no excuse if you follow the Mortgage Coach YouTube channel not to know what to say. And then it just becomes priority. Like if you literally said, my database, calling on my database is my single most important priority as a mortgage professional, everything changes. And then if you create a habit around it, remember guys, you pick your habits pick your life. And so it really comes down to just developing that habit. Back to you, Josh.
Yeah, well said, dude. You pick your habits pick your life. That's really well said. All right, so I'm going to share with you the two pieces of technology that I use. But regardless of what piece of technology you use, I want to make sure that people get the point that the data bank is the most important asset that any mortgage originator has. Should be guarded, protected, and it should be curated, kept like a garden, because it is the most valuable asset we have. And regardless of technology, the takeaway is we should be calling those customers every single day. Not all of them, right? But there should be a rotation, a cadence, a prioritization, and there should be a commitment to dial into those people and act, because if we don't, we're going to get acted upon. And we know that our clients are getting marketed to.
One more thing I'm going to insert here real quick, Josh, is, and I would urge you to do this from stage. And for those of you that either one, don't have your contacts in a database in a way that is actionable, forget what Josh said. It is not your most valuable asset. For those of you that aren't doing what Josh is going to show you next, Borrow Intelligent, your data is not your most important asset. And I would tell you, you are the loan officer of the past. This whole presentation is be the modern originator. And the modern originator makes their database their number one priority. They have the right technology to do such. They have the right daily activities to do such, and they have the right habits. And you know what? They are not like a gerbil running on a mill. Just, I'm only as good as what rates are at today, and I'm only as good as my last month. If you want predictable, consistent residual revenue as a mortgage professional, do what Josh says. So I just want to insert that, because you said, oh, your database is your most valuable asset. Well, guys, I will bet you the majority of the loan officers in the audience and the majority of you watching this, it's not true. Your database is the most valuable asset, and it could be. It could change your career.
And I would just add, if you don't have your data in that kind of a place like Dave just shared, you got to fix that. I'll go back to this saying, employees find problems, entrepreneurs find solutions. Like, you got to get your data in order. Like, that is priority number one. I'll give you two priorities: breathe oxygen and then get your data bank in order. That's it. Like, those are the only things you should be focused on right now, especially going into 2023, where there's a very high probability that we're going to see rates go down in a recession. All right. Lightning speed, because they're going to kick me off stage here pretty soon. This is what most of our past clients look like. We don't remember their faces, can't really make them out, have no idea what's going on in their lives. maybe not an organized database, and so we don't call. But this is what our data banks can look like with technology. We can see what's happening in the lives of our customers. We can see an opportunity to reach out, not just to transact. That should not be the intention, but we reach out with the intention to interact, to increase the frequency of valuable interaction with our customers. And trust me, this is what Rocket and Zillow's databases look like. This is the mortgage professional of the future. So insight's one thing. That's great. Hey, I know something's going on. But when you marry insight and strategy, now you start to teach. Once you start to teach your customers, you become, I don't know if anybody has read the book, The Challenger Sales, I always get the name of that wrong, Challenger Salesperson. That whole book is about challenging the assumptions of your customer. And in that zone of friction and challenge, you transcend from salesperson to teacher. And once you have taken that position in the mind of a consumer, that you're a coach, you're helping them make better decisions, your loyalty will last forever. So the trick is here, how do we manage our data bank so that we have insights, and then we marry that with strategy through the total cost analysis, and that creates education that positions us as the teacher. Go ahead, Dave.
So I want to insert something else here, guys. You know, it has, I wouldn't call it a commodity yet. Not every loan officer is getting an alert when their credit is pulled with someone else, but that's not incredibly uncommon. A lot of loan officers are getting listing alerts. I would tell you that tells you that someone's cheating on you. That tells you that someone already took action on something. Now, you absolutely need to call those. You need to call those aggressively to learn, to connect. And the best loan officers are winning a certain percentage of those, like 20% of them. But guys, the most valuable alerts are the lifestyle alerts. They're the cash out opportunities. And I just want to remind, and I would recommend you insert this, because there are a lot of loan officers that they think of alerts and they think of, oh, credit inquiry alerts. And guys, super valuable, take nothing away from it. I've interviewed Josh and his loan officers where they've won some of those because they're delivering advice, but I just can't emphasize enough, the future of the modern originator is to be there for the consumer ahead of the referral. It's like to make that promise at the point of sale.
Great
that
point.
I'm going to manage your mortgage over time. I'm going to always make sure you have the right decision. That means I need to have a signal. I need to know when you got a baby. I need to know when you got a new job. I need to know when your equity hit a certain milestone. I need to know when your credit increased by X. And that is where you become the modern originator, is looking at all the signals and then creating insights and then creating strategies by, hey, I know something about this consumer. I put a mortgage coach total cost analysis around that consumer. And then of course, you as the human being, you need to do your job. You need to call up, you need to connect, and you need to make it like personal. Josh, you were going to say something.
By the way, guess who can't have access to this information?
Realtors.
Your realtors, your CPAs, financial advisors, your estate attorneys, your entire network does not have the opportunity to get this. So what Dave's describing is, let's get so far upstream that you know what's happening in the lives of your customers, and you're having these consultative conversations well before they would ever get to the point of needing that referral to the estate attorney. Because if they're on their phone looking for estate attorneys, that means that you didn't get the opportunity to refer them to yours inside your network. So that's a whole other piece of it.
And that's how you become the captain of the wealth team.
That's it.
The mortgage advisor of the future is the single most valuable advisor to a consumer. And you can be the single most valuable resource to a CPA, to a financial planner, to a realtor. Back to you, Josh.
Amen. So most of you are aware of this, but these are the core alerts that our team is getting notified of every morning, 7 a.m. They are getting a list of potential opportunities to call into our data bank. And think about this for a minute. What would your business look like if you prioritize the first 2 hours of your day with a time block? Ironically, the speaker after me is going to be Todd Bookspan teaching about Win by Noon. But imagine what that would look like if you prioritize the first 2 hours of day to call into your data bank every single day. This tool enables us to monitor the 15,000 people we have in our data bank 24 hours a day, 7 days a week, 365 days a year, looking for opportunities. And as you said, Dave, people don't know what to say. That's one of the reasons why they don't call. They get those alerts and they look at them and they go, cool, 10 alerts, no idea what to say. Well, in concert with Jeremy Forcier and Dave Savage, we created a trigger alert scripts. So if you take a picture of that QR code, you can actually download this presentation and you can also get a copy of our trigger alert scripts. You can also text TRIBE, TRIIBE, to this phone number, and you'll be able to download the presentation and get a list of those scripts. There's also on that script download a link to the YouTube video that Jeremy Forcier and Dave Savage did on trigger alerts. It was fantastic. Okay, I'm going to share a case study. This case study came from an equity alert. There was no reason on God's green earth for my mortgage partner, Ben Kyle, to call this customer. Interest rates were in the 6s. Their loan was in the 3s. We got an equity alert. Ben called up the customer, said, Miss Brown, did you know that your 3% down payment has turned into $175,000 in equity in just over 3.5 years? I just wanted to call and congratulate you. I remember how scary that was. I remember how hard it was to find the home and to negotiate and to the multiple offer situations. You remember that? But I wanted to just commend you for being brave and sticking with it. And I wanted to just celebrate with you how much equity and wealth you've built in your home. By the way, Ms. Brown, how are you doing on your financial journey? Ms. Brown said, Ben, thanks for calling. The home's great. We're super happy. We're super grateful you got us into the home. I'm glad I've seen the values go up. But Mr. Brown actually had an injury. He got hurt on the job. He was off work for months, and we piled up a whole bunch of credit card bills. We've piled up a bunch of medical bills, and every bit of our savings, we had to quit contributing to our retirement accounts. We had to cut down on our expenses, and everything's going to service those. And Ben says, okay, well, let me put together a strategy for you. Let's see if we can't access some of that equity that's currently frozen behind the walls of your home. Let's see if we can't activate some of that equity, put it to work, and pay off some of those debts for you. So Ben put together this total cost analysis, and he showed Miss Brown, you'll see in this first column, this is her total amount of payments that were going out each month, including her mortgage and the rest of her liabilities. Ben was able to pull out $55,000 for this family, and in doing so, was able to pay off a lot of those debts, bring their mortgage payment down. But here's what I want to show you. Their interest rate on their mortgage was 3.875. Because of where their credit was, they ended up with a 7% mortgage. Most loan officers would have never had this conversation. Most loan officers would have looked at the rate, looked at the current market, and moved on. Now, this is cool because it resulted in a deal for Ben, but what it resulted for the Brown family was a lot more significant than that, because Ben took it a step forward and he said, hey, Ms. Brown, I can save you this $1,000 a month, but you're already used to making this payment. You've kind of adjusted your life. So what if we took that $1,000 a month and we invested it? So this third column over here shows that Miss Brown and Mr. Brown are going to make a $2,481 mortgage payment, and then they're going to take $1,003 a month, and they're going to invest it in their savings, in their retirement, because they've gotten themselves off track over the last few years. And what Ben was able to show Miss Brown is on your current trajectory in 30 years, you'll have a free and clear home. If it appreciates at 4% over the next 30 years, you're going to have a free and clear home worth $1.3 million, but you're going to be way off track with your liquidity. If you take that $1,000 a month that you've been already factoring into your budget and you invest it, and we get a 7% return over that period of time, you're going to come up with an additional $1 million. So, Ms. Brown, which would you rather have? A 3.875% interest rate? Or would you rather have $1 million in retirement? And Ms. Brown said, I'll take the $1 million, Ben. How do we get started? Ben took the application, got rolling with Ms. Brown, and that day introduced her to a financial advisor. And Ms. Brown is now on her way to becoming financially comfortable in retirement because of an equity alert that most loan officers would have skipped over. And what I would offer is, once we've become that type of teacher, educator, consultant, advisor, that we have a much higher probability, if not certainty, in getting the rest of those 11 transactions in a consumer's life.
I want to make sure everyone connects the dot on what just happened, because there are two things that create the mortgage professional of the future. One, they turn their data into a data bank, and Josh described how he did that, powered by Sales Boomerang. And two, they focus on financial freedom for their consumers. Now, this is a very big win. You know, not every time you help a family are you going to add an extra $1 million to their net worth. And sometimes Josh and team is adding millions of dollars in increased net worth. But even if it's like hundreds of thousands of dollars, you know, just the idea of when you put a family into debt, you give them a little financial literacy and said, hey, if you paid an extra 100 or 200 or 300 against your mortgage, look at how much faster you'd pay it off and look at how much interest you would save. Or if you invested that with a financial planner. Guys, the mortgage professional of the future believes that all families' number one goal is financial freedom. And they make sure that every time they serve that family with advice, it's like, hey, here's your rate, here's your payment, here's your cash to close, and here's your freedom point. And here's some strategies to accelerate that freedom point. So it's just adding one, and it is data. It's managing your database, turning it into a data bank, and it's giving a little more data to the consumer. Back to you, Josh. I know you got to wrap this up and pretty quickly, but hopefully everybody's getting huge value from this. This is an incredible presentation.
Thanks, man. I appreciate the kind words, and I agree with you in everything you just said. Well, our friend and coach Renee Rodriguez would whip me brutally if I didn't have a tie down here. So let's do that, my friend. Team, here's the deal. Everything that I've just shown you took me 13 years to figure out. And what I'm aware is that there's people going to watch this. There's people going to be in the audience next week that are on one end of the spectrum, and over 13 years, we've developed to the other end of the spectrum. And the distance between those two places could cause inertia. So I want to share with you, most of you probably know this acronym, right? LODI, Law of Diminishing Intent. And this came from Jim Rohn. And basically he said, when somebody sees something and it strikes a chord in them, if they don't take action immediately, the probability of success diminishes as time goes on. And so what I would offer is to use LODI to your advantage. Do not leave this conversation and just be like, okay, that was cool. We got an hour with each other and I could have watched my favorite episode of TV. Like, we have to take action right now. Execute, execute, execute. So I'm going to give you 4 steps. Number 1, download this presentation. I'm going to give that QR code here one more time. Download this presentation. You can give this presentation to your realtors. This same QR code will enable you to download the scripts. That would be action item number 1. Action item number 2, I would strongly recommend that you go to the Mortgage Coach YouTube channel and you just start watching, digesting more content I have the Mortgage Coach YouTube channel saved on my phone as a favorite right in my home screen. I don't know if you can see it, but it's right there. Like I have that under wisdom is the Mortgage Coach YouTube channel. And I go in there frequently and watch those videos. I would encourage you to do that. That is an absolute one of those things that's going to continue to inspire you. The next thing I would do is, regardless of all this technology, this is step number 3, regardless of all this technology, this may take you a little bit of time to implement. Just start calling into your data bank. Just get your database in order. Start dialing into it, create a cadence that you call into it every day. Because if Fannie Mae is correct and rates go to 4.4% and you haven't called that client since you put them in the home, you're going to look like a predator. If you start calling now and you start planting seeds, hey, just wanted to check in on you. Congratulations on your equity. By the way, I believe there's a recession coming. Don't be afraid. Mortgage values actually do well in recessions. But the reason that I want to alert you to this is that mortgage interest rates always go down. And I want you to know that I am managing your mortgage. I've made a commitment to you for 30 years, not just 30 days of the transaction. I am proactively managing that mortgage for you. And the minute that there's an opportunity to save you money, I'm going to be proactively calling out to you. If you have questions, call me, but know that I am managing that indebtedness on your behalf. Start planting those seeds, because then when your customer sees the billboard or the pop-up, they don't click on better. They call Josh. They remember you planted that seed. All right. And the last thing that I want to offer is, if you implement these steps, we have an opportunity to transcend what the mortgage industry has been up to this point. Up to this point, by and large, the mortgage industry has been focused on selling debt, earning commissions, and then finding the next person to sell debt to. We can have a much bigger cause. We can change the entire mortgage industry by increasing the frequency of interaction, by becoming the advisor, by teaching people how to do better with their financial decisions and how to use leverage to create wealth. And so not only is this an opportunity for you to make more money and to monetize your data bank, but this is an opportunity to improve communities. This is an opportunity to help people. And so my final ask would be, help me change the mortgage industry for the better, and take action immediately and make sure that you don't forget what you've learned here today, so that we can get ready for the year ahead, which I think is going to be an absolutely epic one.
Boom. So guys, let's give Josh Mettle. And I would add one more thing, in addition to creating a residual income business, in addition to really changing the world, you'll have more fun. I hear all the time from loan officers who went from being fee worksheet, transactional loan officers to advisors.
That's a great point, dude.
Families achieve financial freedom faster. They have more fun. They feel better about the profession that they have. They are happier. They are more fulfilled. So Josh, dude, I am so grateful for the change agent that you are in the industry.
Thanks,
congratulations on your coaching program. I really appreciate just how you elevate all loan officers. Can't wait to see you in Vegas, brother.
Looking forward to it.
Everybody who's watching this, hopefully you got a lot of value. Obviously, make sure I always tell people, we're trying to be like the Mortgage Coach YouTube channel is like trying to be the Netflix for loan officers. Just watch one video a week. I don't care if you're new, you should watch a video a day. But if you're experienced, just watch one a week. And go ahead, Josh.
I just want to say one thing about that. Watch a video a week, but don't digest it like it was an episode of 1883. You have to find something in those pieces of content that you put in your business. So if I was watching this presentation and I found something in here that I want to implement, I would put an appointment in my calendar for Monday morning. And I would have an hour that I was going to work on that thing. If we just digest the content without putting it into play, then it's just entertainment. So we have to make sure that we marry the content with the execute. And you have to get that stuff in your calendar, and you have to have time blocks to do that stuff, or you just blow around for 10 years and nothing changes in your business. You have to execute, execute, execute.
Love it, guys. So Josh, thank you, brother.
Thanks,
See
buddy.
you in a couple of days. Hopefully you got value. If you don't already like the Mortgage Coach YouTube channel, give it a like. Make sure you took a picture of Josh's code.
Put it on your homepage.
Yeah. Oh, dude, I wrote that down. I am going to create a wisdom. See that little wisdom thing? Mortgage Coach YouTube channel, Audible, whatever you consume to get better. Great little takeaway. Anyways, give this a like if you got value, y'all. Take care.
Thanks, everybody. See you, brother.